Hi, I'm Mark and I work in the office agency team at Strettons. I think that owner-occupiers are currently spotting an opportunity in the market. It is a marketplace that has seen unprecedented change over the last 2 years, particularly with interest rate rises that we've seen since the mini budget of 2022. And it's never been a more level playing field for owner-occupiers to be competing alongside investors in purchasing commercial premises for their businesses. And we've seen a trend towards businesses that are looking to invest in their business's future and take that opportunity to take control of their outgoings and the destiny of their business. There's been a shift in pricing, quite simply. There has never been a more affordable time to buy business premises at any point within the last 10 years. And while interest rates are certainly higher than they have been historically, there is an opportunity for buyers to get into the market at the current level of pricing that we're seeing at the moment. And it's a sound investment opportunity for people, whether you're buying that as a business, whether you're buying that as an individual, or potentially through your SIP. I think there is an expectation that there will be growth in prices and rents in the medium term. And it's a fantastic opportunity to get in. That's a really good price position in the market. Traditionally, owner-occupier purchasers have always struggled to compete in terms of positioning offers and their interest alongside investors who historically have always been far better funded and more proactive in terms of the pricing point that they will apply to a particular building. Owner-occupiers at the moment really do have an opportunity to compete on all fours in a way that's not been there for years, really, and take an opportunity to buy in at the rebased prices that we've seen currently. Most of the interest that we've seen is from office occupiers from a variety of sectors, generally within the professional services, creative and other media businesses. We are also seeing inquiries from retailers looking to buy their own business, shop and upper parts, where there's an opportunity to work and potentially live from the same premises. And our industrial team are reporting interest from a range of warehouse and studio space right across Greater London. We acquired an amazing riverfront property in Deptford for a creative workspace company that we do a lot of work for, 25,000 square foot self-contained building with extensive frontage to the River Thames. We acquired that building for a little over £200 a square foot, which in context of where values have been historically was a phenomenal figure. There's a building that we sold in Holloway, which was around 15,000 square foot to a food production company. And we've got another 15,000 square foot building under offer in Hackney Wick to a fashion company. And right the way down to smaller buildings, there was a building we sold just before Christmas 2023, which was a 3,500 square foot building in Aldgate. Again, bought by a social enterprise company with one floor free, short-term income on the other floors, allowing them the opportunity to expand into that building over the next 12 to 24 months. A lot of buyers are out there with cash funds. We're finding, though, that an increasing number are relying on bank funding for an element of the purchase price. But I think what we are seeing is that notwithstanding that the credit criteria that lenders are applying on these types of loans has tightened, and of course cost of borrowing increased as well. We're dealing with businesses that have a credible business proposition and a strategic property play that is integral to the expansion of their business. I think that the banks like that story, and that's proving to be a relatively straightforward process for most buyers. We are also seeing that there are a number of buyers out there with pension money, if you like, via SIPs and other pension vehicles who are using funds that they've got within their pension to acquire business premises. We're also seeing an increasing trend towards owner-occupiers buying part vacant investments, so taking buildings where they can occupy part of the premises for their own use and getting an income from other occupied parts of the building with a view to potentially expanding into that space over time. I think at the moment investors are super cautious. I mean, I've been in the market for a long time, and I think during 2023, and it has to be said so far in 2024, the levels of interest that investors have been showing in office property in particular is at an all-time low. And unless the pricing is extremely attractive, it's just not getting traction from that investor buyer. And that's why I think that owner-occupiers are in a unique position to take advantage of the lack of investor appetite that we're seeing currently. What we are seeing is that there is a change in disposal strategy that we are taking forward for vendor clients as a result in the shift in demand between investors and owner-occupiers. Traditionally, we would have tended to take the approach whereby we would lease and then sell that asset as an investment. Now, with the owner-occupier interest as it is, and weak investor yields that are being applied to commercial assets at the moment, is we're finding that actually the best strategy for most of our clients is to consider sale to an owner-occupier with vacant possession, whether that's in shell condition or fitting that out for a particular end user.